Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, as always joined by the University of Missouri's Ben Brown. But today Ben's on the road. Where are you going, Ben?
That's right. I'm heading to Farmington, Missouri to do an evening program tonight. So due to the time commitment it takes to get there, and when we do this program, I am doing it from the road. So I'm hot spotting on top of a hill. Hopefully our signal holds. I'm fighting some sun, uh, trying to get this in today. So
Well,
thanks for working with me.
after daylight savings, you'd think the sun be down already.
Yeah, you would. That's right. I will say though, I really did appreciate the extra sunlight this morning. I never think it makes that big of a deal. Then it happens, and I'm like, yeah, actually, I do enjoy having a little bit more light in the morning. So it
Yeah,
works.
I don't know. I'm in the other camp. I don't mind if I start out and it's still dark outside. But when I'm
Yeah.
driving home and it's already the sun's down, it to me it's annoying. But
Yeah.
I think this is the last year of it. Next year we're springing forward, and then that's it. Think
Oh,
we're
I
done
didn't
with
know that.
it. Yeah, so watch out for next year. So before we get into today's discussions, I'm going to give a quick rundown on prices. So we continue to see some light changes for the most part. Starting out with December 23 corn, down 1 cent at 4.77. December 24 corn is up 6 cents at 5.17. January 24 soybeans up 57 cents, so a sizable gain there on the week at 13.64. November 24 soybeans up 39 cents at 13.04. Soybean oil for December on a cents by pound basis, we're down 1.59 cents at 50.8 there. Soybean meal by the short ton for December up $11 at 437.50.50. And then December wheat for the 23 year up 9 cents at 5.75. July wheat for the 24 year up 8 cents at 6.35. And then you see that crude oil contract for January drop $1.02 at 80.91. So Ben, we continue to see a lot of light action, especially in that corn, just mostly holding steady. Some reasonable gains on the soybean front, and then again that soybean meal contract continues to climb up. So what's your key takeaways as you see the action coming into this week?
Sure. Yeah. So starting on that corn contract, outside of that one little rally that we saw there the middle of October, they got us up above $5 on the nearby futures contract. Corn is largely traded in a sideways pattern since the end of August, and that seems to continue here. On the soybean side, we have seen a little bit of a rally here. Just as a side note, I write many market commentaries for different magazines or whatever, whoever, Brownfield sometimes that ask me, and we always have to give those like a couple of weeks in advance to get them through the printing and out through distribution. And I'm always nervous that by the time
Big
I
shift.
write those to when they get published, that things will change. And this most recent November outlook that I wrote, which would have been 3 weeks ago, I talked about the potential here for a late season soybean rally. So I'm kind of selfishly, I'm happy to see that's living out and it's not making me look bad in print. So
Yeah.
those would be my comments there.
Well, and you see that potential maybe for the soybeans moving forward, but as we talked about last week, and talking just a little bit ago, it continues on the corn front. That Ben, you talk about a market cap on the corn side. So really, do you see, I guess, that $5 mark is a hard limit on the nearby contracts?
Yeah, it seems to be the psychological break for many producers. A lot of U.S. producers haven't sold as much of their corn crop as what we'd normally see this year. We can kind of tease that out of futures and options positions held by merchants and producers. We would expect that, as more product gets sold into the market, elevators are either then selling their position or futures, or excuse me, or producers are buying back, to offset their position. So long story short, we haven't really seen that. We're, a lot lower in terms of total short positions for 2023, signaling that producers haven't sold as much. Therefore, I think that if the price rallies above $5, like what we saw here in the mid-October, the producers will sell and we'll bring that price back down for a period of time.
So talking, some factors there on the actual X's and O's end from a farmer's day. Let's flip over to the other half of the conversation when you talk about just overall financial pressure. in the US, overall financials there. We saw the Federal Reserve last week had an announcement, had Fed week, no changes there for the short-term interest rates. But the Fed is still looking at potentially being aggressive moving forward, but the market really didn't necessarily take it that way, according to a lot of the discussion that you've been commenting on. So, Ben, where do we maybe go from here? What are your expectations, and what might the market be expecting?
Sure. I think we've maybe found the top of the interest rate hike, or at least this cycle, uh, in terms of increases in those short-term borrowing rates. Jerome Powell, the Federal Reserve Chair, tried his hardest to sound hawkish during last week's press conference. However, the market perceived his comments to be a little bit dovish. That sent Treasury yields and the U.S. dollar down. To the benefit of U.S. soybean producers, the weaker dollar actually brought back some buying, some international buying into the soybean complex. So, the fact that we saw a little bit weaker of a dollar to end the week certainly helped that soybean complex. I think as I look broader into the macro economy, last week's monthly jobs report, which these would be jobs for the month of October, signaled that the economy created 150,000 jobs in October. That fell short of the 180,000 jobs that were expected. That the unemployment rate ticked a little higher. We saw labor force participation move a little lower. And I think the bottom line of everything I just said is that after a rosy picture of the last few weeks regarding the U.S. economy, the most recent data would suggest that the economy is starting to slow down.
Mm. So, Ben, all that sounded like a long word math problem that I get in sixth grade. You gave me flashbacks there. But
Yeah,
really,
you got to figure out what you need and what to kick out. I go through this with my students, write everything down, kick out what you don't need. That's how you do word problems. I'm giving you a tip.
well, just talking about considering what you need and trying to ignore what doesn't matter for farmers looking at how they're going to operate within the current markets for the rest of this calendar year. What's your advice generally to producers as they look at, maybe saw a lot of producers are holding on to corn, but maybe being more aggressive in the soybean market. So if you're a producer now, what should you really be paying attention to?
Well, so harvest is nearly done in the United States, outside of a couple of pockets in the Midwest and the Eastern Corn Belt and the Great Northern Plains. We've largely finished and have a decent idea what 2023 is supply is going to be. I would add that there's maybe one caveat to that statement, and that is the difference between planted acreage and harvested acreage reported by USDA. USDA will take a look at any historical deviations in that gap in January. And I think given the drought that we've seen this year, we could see a little bit larger, quote unquote, failed acres in this year's supply and demand balance sheet. So that to me strikes as a potential bullish signal moving forward. I think soybeans have a little bit of a bullish short-term outlook here. Certainly by the time we get around to February and March, as long as there is no major production issues in South America, we should see prices start to come down at that point of time, or that period of time, because again, we'll be seeing more global supplies, potentially a stronger crop coming in the summer of 2024 here in the United States. So I think that's the window we're looking at on the soybean side. For the feed grains, there's just not a lot of bullish support. And even the support that is
Stagnant
there,
market.
yeah, is kind of, we're seeing a little bit of a, we talked about the corn, about how, farmers haven't sold a lot, and therefore, that provides a cap in the market, even if we had some bullish fundamentals.
Well, Ben, I have to tease you a little bit. I think sometimes economists talk more about animals than livestock producers do, between bears, bulls, and then doves and hawks in today's episode. But talking about maybe that support not being there, it kind of limits, I guess, some of the action that producers might be holding on to see. So as we look through this week, look at the reports that are upcoming, what should farmers and ranchers really be paying attention to that could move the market?
Yeah, so USDA will come out with their November supply and demand estimates on Thursday. That really headlines this week. I don't expect a lot of changes. I think the changes that were going to be made were made in October. So I don't expect a big shocker of a report come Thursday. Uh, Potentially a little bit higher yield is maybe in the works. And then outside of that, Veterans Day observation on Friday. Big thanks to all our veterans out there in the market. The market and USDA are off for the day.
Yep. All right. So things to look to, and I guess that'll probably offset the days maybe on some of the reports we might see.
That is correct. So we won't have a CFTC report on Friday. It'll come out next Monday.
All right. Well, Ben, it's always a pleasure to get your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us, what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.